Welcome back to Reform Millennials, a podcast where we discuss the intersection of markets, politics, and pop culture. Please remember that the content of this show is for educational and entertainment purposes only. Nothing should be considered financial or tax advice. Please consult a professional before you make any investment decisions.
Morning, Joel.
Good morning, Mel. Welcome back.
And yes, glad to be back. I'm getting tired. We were just talking things in both politics and finance tend to slow down a little bit in the summer months. And I think there's been a lot going on. So I'm going to be grateful for a few weeks during the summer months of not earth-shattering things happening, knock on wood.
Yeah, for myself, definitely the summer is slower, but during paradigm shifting technological revolutions, it tends to be a little faster. So from a portfolio manager perspective, the hat that I wear there is significantly heavier than the wealth management side this summer, I anticipate. But I think that actually kicks off my little cold open here I wanted to talk through. So today's May 11th morning, which I think is important to identify moving forward because news and it goes stale quickly these days. So for every 20 or 30 years, a new general purpose technology shows up and it rewrites the entire economic order. We can all go through each one of these examples from the dot-com of the 2000s to multiple different industrial revolutions through from the computer in the 80s and railways of the 1800s, agricultural revolution. Every single time, it seems the same thing happens. You have a group that chooses to adopt, and this group benefits from the early compounding effects. And another group will call it a fad, or they will say that it's dangerous, or they will suggest that their experience makes them, or whatever they do, makes them immune to this technology. And by the time that they look back or look up from their ignorance or their chosen ignorance, the gap that the group that chose to adopt that technology between them, the delta there is so obscenely large that it makes it very challenging for them to catch up. But in each one of those past technology cycles, we actually had a decade, 2 decades, 3 decades, 4 decades in the case of railways to catch up. That isn't going to be the case this time. And the line that I'm pulling from an interview I saw over the past weekend that I'm going to use here is, I don't use AI is the new I don't use computers, is going to be, and people choosing not to adopt is going to put them in a position where they never are able to catch up at any point. And I want to bring that up, and I want to bring this to call this to, attention to this, because I believe that the technology is moving so incredibly fast these days that it's going to shut people out from economic opportunity. It very well could push them out of relevance inside of their current career if they aren't open to understanding and learning. Previous shifts gave you the time to catch up, but with AI, I think the gap early is going to be so large that within 18 months, most folks won't have the time or the ability to catch up. The moat that you had from just intellectual relevance or ability or whatever lessons you've learned is likely going to get arbitrage so darn quick that you need to be present and willing to adapt. So there's this saying that I often say is that if you don't adapt, you're going to die. And I think it's just doubly true today. So
Joel, what do you think I think you're right on this. And I think that a lot of people, I don't necessarily know that people not wanting to adopt is something that they're hell-bent on sticking to, but I sort of see even in myself, and I think I'm pretty open to this stuff. I do wonder, are people resistant to it just because they don't feel like they are going to be able to participate? And so it's easier to sort of like live within that reality of pretending like it's not going to impact us. Like, what do you think is driving people's hesitant nature of adapting if they can? And what do you think the barriers are that exist?
I think it's intimidating would be the most obvious reason for why folks will avoid it. I would also say that anything that has a cost to use at the beginning is an initial hurdle, and perhaps even unfair. These models to use, like the upper end leading edge, is costing between 30 and 250 US dollars a month to use. If you want to start adding it to your enterprise, there's some people I know that are spending $10 million a year on cloud. So
introduce me to those people.
Right.
Just kidding.
And they're doing it just in fairly small organizations. They're like with sub 100 employees. So there's large gaps, obviously, but for myself, I'm spending $1,000 a month likely in tokens and different subscriptions. So there is that hurdle, I think, but just to get comfortable with the different harnesses being ways in which you can attach it to different workflows, playing with it at home, even with little projects, whether it be making an app for a cookbook for your wife or something, anything like that would be examples of doing something that would make you more comfortable with the technology and it costing you nothing. But I believe it has a lot to do with just the intimidation, the understanding or thinking that you need to understand compute and to understand the underlying technology there being a headwind for folks. I think that's possibly a part of it. But at the end of the day, it's never made technology and computers more easy to use. And that's why I believe it's democratized complexity on the compute side of the world. And so I hope that folks are not intimidated, and that's the reasoning for them avoiding. You could probably make an argument that some people are scared of its ability to learn too much about you, and then there's some effects there. I think that's possible, and I think warranted in many cases. My wife actually sent me a really compelling article from the Wall Street Journal the New York Times. I can't remember which one, but in any case, it talked about the government writing policy requiring the advice that these LLMs give be attached to a fiduciary duty. I actually think that is a really great direction that the government should be taking with regulating these things. But at any rate, I think that framework of understanding that these don't have a fiduciary duty to give you advice, you need to have an understanding of what they're giving you, and it not being something you should rely completely on. And you need to find folks that are experts, or you need to confirm that this is accurate, because these things do hallucinate. So there's that. But
I think also you kind of touched on it when you said the intimidating nature of the technology, but I do think time as well. Like it is sort of, I think we often think of the costs as monetary, but I do think people who are more in control of their time or have the ability to have help with different things in their lives, giving them some free time. Like I think in our lives today, we arguably have easier lives than we did, but a lot of people I don't think have the kind of free time, or they aren't recognizing the kind of free time that they have. And I think there's a number of reasons for that. But I do think, if you're a person who works from home or has their own business or has some help with the kids or around the house, et cetera, you are just innately in a better position. Even if you don't have the best computer or the best hardware to test this stuff out, you're already, I think, so much more ahead of people who really have to trade their time for money and don't have the same flexibility if they have young kids and not a lot of help and all that kind of stuff. So I also do think that's an interesting divide, more than just financially as well.
Yeah, I see people using it across so many different domains, and it does unlock a lot of time for people. I know it has for me, but it's actually taken away a lot of time for me.
Yeah.
I think in the economy, what folks that have adopted because it's basically a motorcycle for the mind. In the way in which the computer was a bicycle for the mind, AI is effectively just, you've attached a 200 horsepower engine to a bicycle. And what that ends up doing is your output is multiplied significantly, but the expectations have come with it. And so that is not going to stop. It's going to continue. And this has been my take on its impacts of the economy for a long time in people's different careers. You're going to have increased expectations. Quality of output is going to be increased along with it. And then you're going to end up seeing folks that have a lot of agency and have a respected amount of expertise. They're going to be using this as leverage, and they're going to produce more than they ever have in the past. And as a result, there's going to be continuation of the K-shape in our economies across careers and across different sectors. So you either choose to be one of those folks that are going to take advantage of it, or unfortunately that 20-year moat you've been building around your career is going to be crossed in 18 months by folks that are adopting these things. And if you take the stance that AI isn't for me, and just because there's like some form of value statement there, truly that's more so a career strategy, and it's not a very good one. So I guess I'm making that statement. Where I'm heading with this episode, where we're going to chat today, is we've kind of covered the AI boomerism portion, but I want to talk through this bull market that we're currently running through. We have the NASDAQ, S&P 500, Dow, the small caps, TSX. Everybody's hitting new all-time highs. Even the Chinese index has hit a 4-year high. Things are running, and this is in the face of oil prices. So I'm going to chat. We're also going to talk about the Strait for a minute, and work our way into the Mark Carney plan for cleaning Canadian oil, and over the weekend there was a ton of conversations about MOUs, egress west, egress south, egress east, what that means for Alberta government, what it means for the Alberta economy, what it means for the Canadian economy, and whether or not any of this has any teeth, and is it possible? I'm not going to ask Mel for her opinion on the direction, but what I do want her to do is to lay the ground for us. I want her to clean the air a bit, because for myself, it seems very murky and dirty, and I want to know where things lie and the intentions of each one of these press releases. So let me reverse back a bit, Mel. What I want to do is I'm gonna chat through this market. I think it's important. On the year, you have indexes creeping up on 6, 7, 8% in terms of total return, up from just 6 weeks ago when the market was in a drawdown of 4, 5, 6%. And everyone was very concerned about the Strait. This is interesting because breadth hasn't really broken out. Breadth being not all portions of the North American economy are taking part in this new all-time high portion. A good piece of the success here lies at the feet of the AI infrastructure trade, and also energy stocks, which also are impacted by the Strait, but also this new renewed demand for energy that is stemming from the infrastructure build out. So you have a positioning that is slightly different than what we've seen in the past, which is like, for the longest time, 15 years or so, we've seen the lion's share of value being accruing to the big seven. So our Mag 7, fantastic hyperscalers. So Meta, Google, Amazon, Microsoft, Apple. And to an extent, these are contributing to a lot of this upside. Apple just broke out to a new all-time high slowly, but it started. Google has been on an absolute tear and is inching up on taking NVIDIA's crown for the largest company in the world. These companies are contributing absolutely, but more interestingly, as a percentage of the return on the S&P 500, the semiconductor industry is largely outpaced each one of these tech super companies. And we've gotten to the point where semiconductors are now 17% of the S&P 500, which is quite significant. NVIDIA, AV, Broadcom, and MU alone are $7.5 trillion of value, roughly 2.5 times the size of the Toronto Stock Exchange. So these things are very real. It's likely that Micron is going to hit 1 trillion in value within the next couple of weeks if it continues on the run that it's on. The current market right now is telling us, if you weren't long AI and the infrastructure play, you are going to have likely drastically underperformed the market. The healthcare industry, utilities sector, the consumer staples, all doing very poorly. And that's largely due to the Strait being closed, the unknown that's coming this summer with the impending election in the United States. And when your costs go up a ton, you have some political uncertainty, those areas tend to fail. If you were not listening to this podcast or another and being overweight a technological revolution, you're probably in the camp that is saying that this bull market doesn't make any sense. This is a bubble. I don't get it. I think what people need to ground themselves in is the thing that is missed about this tape is that real bubbles are built on euphoria. And right now, consumer sentiment is still near all-time lows. Half of American adults believe that it's a bad time to invest. That is not mania, that is a disbelief. And there's a great quote from George Soros or I should say framing, that I think is important when it comes to bubble talk. And he says that when I see a bubble forming, he rushes in to buy because of the reflexivity of that. Bubbles are powerful trends. Being short them sucks and is stupid. We do not believe this is a bubble, in my opinion anyway. Even if it were, the data shows us that it's, if you're going to listen to one of the greatest of all time, George Soros, you probably need to own more of it, not less. You just have to be very, very, and that's not investment advice, but you want to own these stocks, not because it's not possible for them to pop. You just need to understand that these things tend to continue on, and you need to see euphoria before there's any sort of bubble that's going to pop. And we don't currently have that. So I want to debunk one thing very specifically. There is this, we are reliving the 2000s, the dot-com bubble. And I think that there's some partial truth to this, but I mean, you can have two truths in one hand, or you can hold two truths at one time. A technology can be revolutionary, and the equities tied to it can also be a bubble and can go to zero. Both together are exactly what happened during the 2000 bubble. And like Cisco, if you were to, I don't know, remember that time, was at one point the largest company in the world. It had a 201 times price to equity ratio at its peak. It was trading at like $560 billion market cap. And it went from that peak of 201 times earnings down to single digits. And during that period of time, and what I would consider to be like this lost multi-decade period for Cisco in terms of from an investment return perspective, its revenue actually continued to accelerate from 2000 through to today. And it didn't get to a new all-time high until after. That can happen when you're investing in these things. So while that is true, it doesn't change the reality that 40% of the S&P 500 is dominated by 10 names: Micron, NVIDIA, Meta, Amazon, etc. The premium here, you have these companies trading at 31 times earnings on average, and the S&P 500 is trading at 21 times. During the 2000 period, that peak in terms of the top 10 companies contributing as a percentage of market cap got to 41 times earnings. So we're not currently sitting at a similar reality as we were in 2000. And I think that's largely due to the fact that in the 1995 to 2002 period, you had a bunch of fiber being laid, and that fiber was dark. It had no use. During the railway bubble, you knew that it was over because the cars that were riding those rails were empty. There was no economic value being traded. There's no reason for them to continue to build. These data centers are lit up like crazy, and the lineup to buy more is outrageously long and growing. If you listen to the last quarter's earnings from the hyperscalers, each one of them spoke to the fact that they cannot buy enough. The underlying companies that are selling infrastructure into these businesses are all raising prices. They all stated that they were sold out until 2027. Stop saying that this is a bubble. This is incredibly real. And we're also starting to finally see that each one of these data centers that gets built, it's currently being stated that these have a payback period of less than 3 years. So if you think that these companies are overpaying and they're not seeing economic value, you are wrong. So all of this is to say that you can't predict where the future is going, and you need to understand where the fragility is. And and as a result of that, you have to be careful, but you need to be paying attention here, because if you don't, you're going to own the stuff that doesn't work, and you're going to start generating this thing called fear of missing out. And you're going to end up doing what Dan Druckenmiller did in 1999, 2000, where he bought the absolute top. and then lost a bunch of money because you weren't early enough. Anyways, this is all for me to move into what I think is the prevailing opportunity in Alberta. And interestingly, we're finally getting some news and some policy framework that I currently don't have a good understanding of. I've read enough to put myself in a position where I'm dangerous, but I don't fully grok where we're headed in Alberta and Canada from an energy perspective. As I mentioned in this long diatribe I had, the parts of the market that are doing incredibly well are energy and AI infrastructure, the picks and shovels. Canada has this opportunity set in front of it. We had some statements from Cenovus very recently speaking to the opportunity here. Energy costs and prices are obviously increasing for two reasons: the strait and the large increasing in demand for energy. But also, I think what is like the second portion of this is that the companies that are building these data centers, you know where they're choosing? They're choosing areas where they have an abundance of energy, not a constraint. One of the biggest problems right now for solar, for data centers is permitting. It is access to energy. And interestingly, as somebody who worked in the oil and gas industry for a while, we flare off a ton of industry. We have a bunch of areas where we can effectively, behind the meter, build infrastructure to support these data centers and build them in our province, in our country. You then combine that with the reality that the United States, for all that is made up about them being our enemy, is very clearly trying to increase the amount of energy we can ship to them. So there's an opportunity here. It's quite obvious and it's very real. So now what the heck is going on with Danielle Smith meeting with Mark Carney? What are these MOUs? What are they being put in place for?
Yes. So nobody would judge you or anybody else for being like, what the heck is going on with everything that's happening with respect to building large infrastructure projects in Canada? This is something that is changing all of the time, and the sort of publicly available information that we see crossing our desks in the news, et cetera, does change every few days. And you're right to point out the fact that there was definitely some recent news last week. So we're May 11th today. So last week, Prime Minister Carney and Danielle Smith met in Ottawa. There is a pretty big conservative conference that happens in Ottawa called the Canada Strong and Free Conference. And so Smith and several other conservatives from across the country gathered there last week. And there was a meeting with Mark Carney. So I'm going to try and frame this from as sort of high level as I can to just paint the picture. And there's several different things that are sort of happening at the same time. So part of the discussions that are surrounding the MOU in November 2025, Alberta and Canada came up with an MOU. We've talked about this in the past. I'm not going to go into too many details, but that MOU included several different sort of deadlines and agreed policy and regulatory discussions that spanned from November to the sort of July 1st deadline that is sort of publicly when the Alberta is going to sort of be proposing something to the Major Projects Office. If we go back into 2025, in the summer of 2025, we talked about this last year, the Carney government introduced a couple of pieces of legislation that came by way of Bill C-5, which included this commitment to fast track projects across the country to build Canada. And part of that included a new organization based in Alberta called the Major Projects Office, which is meant to create a streamlined way in which for major projects to be fast-tracked and built even quicker by way of collaboration and coordination from the federal and provincial level. Now, we're talking a little bit about pipelines today, so I'm going to focus on that aspect of the major project. We are seeing a few different elements. So we are seeing the Bill C-5 create the opportunity for this Major Projects Office. We are seeing, as part of the MOU from November of 2025, this commitment that Alberta is going to work with the federal government to get a pipeline to the West Coast. We don't know the route. We don't know the details. We don't know any of that at this point. And that is really where a lot of the conversations are happening. Now, part of what sort of becomes complicated is in teaching government relations and political risk management. One of the most compelling tools that I share with people is two concentric circles, like a Venn diagram that has what I want on one side and what the government wants on the other side. And I encourage people always to look at where those circles overlap and to focus on wins in that area. And so that is largely what we're seeing. If you look at the Alberta government as sort of one entity and the federal government as another entity, the MOU really does look at those places where they overlap. And the sort of struggle that I think has been added to the current context is a third concentric circle, which is what industry wants. Because of course, industry is not just dealing with one order of government in articulating what it needs to see in order for it to make that private investment. And then you could also look at sort of Indigenous communities, et cetera, that are separate, and then just the general public. So you have several different concentric circles happening, and that conceivably makes the place where everybody agrees and overlaps a little bit smaller than you would if there were just you and I negotiating on a deal. I think that based on what we've seen reported publicly, the last sort of sticking point that exists as far as the MOU and a potential pipeline and the major projects office is really this pipeline CCUS pathways project. So if you'll remember, as part of the MOU, the federal government agreed to sort of consider the prospects of an application for a West Coast pipeline through the Major Projects Office, conditional on the Pathways CCUS project being built. Now, this creates a really interesting sort of dynamic because obviously there are concentric circles of the people who are part of Pathways and some of the people that may be able and capable to look at this West Coast pipeline situation. And so what we see now is I'll have this for this, but the how is being sorted out. And a lot of the how, we've got a lot of progress as it looks like on one project, one approval, regulatory coordination. We've got, agreements in principle when it comes to methane and other things. The real sort of sticking point is the industrial carbon price. Now, I think it's really important to note Alberta was actually the first province back in 2007, 2008 to introduce an industrial carbon price. So Alberta is actually the only jurisdiction in Canada that has had a carbon tax for that long. I think BC may have come in shortly after that, if I'm not mistaken, but it is actually being a longstanding policy of the Alberta government, conservative government at that time, as we have now, to look at emissions in the way of putting a price on carbon. So that is actually not something that the federal government has ever had to force Alberta to do. The devil is always in the details in terms of what the pricing is going to look like. And you'll remember that back in 2019, under the Trudeau government, the consumer carbon tax that was introduced federally, as well as the industrial carbon tax, didn't actually put, okay, now Alberta is going to have an industrial carbon tax. They always did. The devil is really in the details and the escalator of how high that price is going to go up per ton and what we like to say equivalency agreements. And so you have both this policy issue of industrial carbon pricing as a concept, which notionally Alberta and the federal government have actually been in agreement on. It's just the details of what that looks like, how high the price is going to go, and the extent to which the federal government has control or sort of oversight on what that looks like from a provincial level. So that's sort of a high level perspective on all of the moving pieces that are going around. Based on the press conference that Premier Smith did last week after she met with Carney, she has expressed optimism on being able to come to some sort of an agreement, because again, the reason why this industrial carbon price is so important is that there is currently no public proponent for a sort of proposed West Coast pipeline, as we've read in the news, and you see industry trying to do the math on whether or not it wants to deploy capital and continued investment in building our oil and gas sector, specifically as it results to more barrels into pipelines, because as well, Alberta is not the only game in town when it comes to oil and gas production. Of course, what's happening in the Middle East is, and previously Russia, et cetera, is changing the game a little bit, and I think creating a huge opportunity, as we've talked about on this podcast in the past. But energy companies have actually several different options of where they can deploy capital and invest across the globe. Most of the energy companies that do business in Canada do business elsewhere as well. So again, you have this provincial government, federal government, industry concentric circles. And it doesn't really matter in a world where you assume that the private sector is going to build a pipeline. If these two governments agree, industry also has to agree. And so you do see a need for both of those governments to consider what is actually required and conditional. And I think the last thing I'll say is there's obviously so many perspectives on the oil and gas sector, some of which are fine, some of which are problematic. I would say the biggest risk that we have in public perception on the oil and gas sector is this perception that, well, the oil is here, they'll do whatever the government tells them to because they want the oil. And that's actually not the case anymore. Like there are specific economic concerns that these companies have. These are public companies. They have a responsibility to shareholders. And whether you like it or not, those companies have to look at what the return is going to be to shareholders. And if they are looking at a jurisdiction like Canada that does not provide the level of certainty that they're going to be able to return value to their shareholders, and that every additional barrel of oil that they extract is going to make financial sense, those companies do not have any moral obligation to invest in Canada. And I know we get tripped up on that a little bit, and we like to think that people do things just because of the feel-good nature of it. But that is actually not the case. And so I think part of what I look at is whether or not all three of these concentric circles, and as well, you should include the public and Indigenous communities, et cetera. There's lots of concentric circles, but I'm sort of assuming that both governments are going to consider the values of voters as those sort of sub buckets. You get a situation where what I want, what you want, what industry wants, federal, provincial, industry, you get a situation where you wonder how aligned all three of those things are. I think that Alberta and industry are pretty aligned on a lot of things, maybe not 100%, but you do get a sense of, with that third circle of the federal government, that they may want to have their cake and eat it too when it comes to an infrastructure project like a pipeline, and they have to consider what's important to them and what their values are. And I think, unfortunately, it would be nice if we could have everything that we wanted, but unfortunately for the federal government, having the economic upside that may exist for a major project like this does and likely is going to come with some compromise. As I always say in negotiating, and especially in government relations and lobbying, if you have to explain to people that you have leverage, you probably don't have as much as you do. And so I think that the federal government does get tripped up on this a little bit. And of course they have leverage. Every entity in these concentric circles do. But the question is, whose back is more up against the wall in this? And I do think that if Carney and his government are serious about what they have said that they want to do and how they want to be there for the country, you want economic independence from the United States. I've got a few solutions there that can be done. So I think that it's a matter of how each of these groups are going to deploy their leverage in these conversations, which has been playing out publicly. And I think it's a matter of what compromise the federal government is willing to make, because I think, I'm not trying to take the violins out for industry and be just like a total shill for big oil, but the reality is this is an industry that has created immense wealth for the country. And if we take advantage of this opportunity, we are just getting started. And these are companies that operate very well, very responsibly, and can create opportunities. And even for those elbows up people, this is the kind of economic independence from the United States that is a literal silver bullet if we're willing work with them on it. So I'll stop there, but that's sort of the high level that as the way I see it based on what we've seen in the news.
And from my perspective, I have this, I don't think that industry has their back up against the wall, and I don't think the federal government has their back against the wall. I actually think that the people most at risk of this impacting their current situation is the provincial government in Alberta that needs this to happen because of expectations, promises, just the whole gambit. The federal government has a majority now. They've been apathetic to, at the worst of times, and at their best, they're anti Alberta energy egress. So to assume that they have their back against the wall here, they don't need to do anything if they want to continue to remain in power, if power is their goal. So to get them to the table here and to get this over the goal line, I believe that there needs to be a belief that there is true. I always think of like, show me the incentives and I'll show you the outcome sort of situation. And I'm hopeful that the perceived ego boost that this can give a Mark Carney in terms of reputation and legacy is going to be sufficient enough for him to justifiably get a deal done, because that to me is the linchpin to all of this. Industry is going to come to the table if they can see 25% ROIC. And if they do, they'll do it. If not, they'll just return money to shareholders, buy more stock, pay people dividends. These companies are printing money right now. They have no obligation outside of doing and running a certain cost structure. And certainly they'll continue to increase production as they increase egress, and as prices go up, they'll make more money. But they don't have there is no reason why they have to drill more or make or produce more national security for our country. That is not their job. And the fact that we are going to expect that from CEOs and from shareholders is obscene, and it's not there. It doesn't get seen anywhere else in any other country anywhere. And so to me, the two things that are very important, because industry will absolutely pull the trigger if they see return. That we know. The unknown is the federal government, and remains the federal government. And is he willing to spend political capital? And does he believe that there is, to me, legacy building, developing opportunity here for him? Because that to me is truly the opportunity here.
I disagree with you on, I don't actually think Alberta, so if we're just looking politically, of course, economically, this would be fantastic for Alberta and no question. But I think if we're just looking through the political lens, I do think that the federal government is more vulnerable than Alberta, because Alberta going to the polls next fall, I think it's politically a win-win for Danielle Smith. Danielle Smith's actually been working with the federal government in ways that I don't think people necessarily expect. They seem to have a very cordial relationship and a good working relationship, which I think, makes me really happy as an Albertan and a Canadian. But if Carney gets in the way of this pipeline, or just oil and gas generally, as previous governments have, that is a win for a conservative government in actually any government in Alberta. This would have been the same situation if it was a progressive government as well. We saw that with Notley. And so I don't think that politically the government suffers provincially if it doesn't happen. And if it does happen, there's obviously that wonderful economic upside and positivity as well. So I actually think from a political perspective, the ball really is in the federal government's court. Yeah, thank you. I'm like, what? In their park, thinking too much about environment and parks. So I actually do think that Smith is in a better political position on this than Carney is. Carney has to think a little bit more. Carney is the one that is going to be within the context of the Liberal government making the bold move. It is not a bold move in Alberta to be a conservative or progressive and care about the oil and gas sector and fight with the federal government. Carney is the one that's going to have to depart from traditional wisdom of prevailing wisdom in Eastern Laurentian elite land. And I think he is the one who has more the potential for a lot of upside, but significant downside, more so than the province and private companies as well.
That's a fair statement. I actually think that's a good pushback. I agree with that. And a reframing. The one thing I want to kind of flesh out a little bit with you is, okay, egress west, it seems to be the dominant talking point. What is required to do that? What does Pathways have to do with this?
I think what does Pathways have to do? Pathways has to be willing to build and sort of carry out the project.
Is that going to be Pathways has to go forward for you to go forward with Pipeline West?
Well, that is what's in the MOU. So that's the thing, right?
That is the thing.
Those are the joint things that are included in the MOU as being conditional. The pipeline is conditional on Pathways. And so
environmental credits pay for Pathways, and then
I don't think it's an exact credit to dollar conversion. Like I do think there's different levers, let's say, that are being considered in terms of funding that project, but it's a huge project. Like I think that like what I've read in the news is billions of
my understanding is it's $16 billion outlay to get.
Yeah, and I believe they're about $10 billion. That's what I've read in the news lately, at least. I don't have any special knowledge of.
So it's actually 40, but yeah. Okay.
Yeah.
Gotcha.
Yeah. I don't know those numbers too specific. I wouldn't want anyone to take those.
No, and for those that don't really know, like I'll be vague. You don't need to it's like effectively a carbon pipeline from north to Cold Lake area, and then they inject carbon into the ground, and that is it produces carbon credits or whatever, however you want to identify the economic model there. And then as a result, we're going to be able to have a lower economic, or I should say environmental impact, because of additional egress would require us to drill more. So if we had an additional 2-3 million barrels of egress or pipeline capacity to ship west, this project putting more carbon in the ground would then make us carbon neutral. Therefore, we are not bad for the world, and we're going to be able to sell more. And now this is the new thing from Carney, that we're going to sell more oil to Asia and to Europe because we have carbon neutral oil and everybody else has bad boy oil. So
yeah, and I think the key thing there is like there first has to be the economic incentive for private companies to want to produce barrels of oil, right?
Which doesn't exist.
Chicken and egg. So that's why the industrial carbon price is playing into this. I don't know. I really want to be hopeful about all of this, because I think that I genuinely do think that you have a provincial government and a federal government that want to make this work. It's just a matter of like this is why I do think that it's the federal government. It's like you basically have, I don't want to say a sure thing because I don't have any special knowledge of like what that would look like, but there's a real opportunity here that the federal government has. And I think that I don't know who I was listening to last week, but it's sort of the old adage of like Canada. It's not like Canada has to make any business case to the world to want to buy the things that we produce here, namely oil and energy. We have what the world wants. It's a matter of whether our federal government wants to take advantage of that opportunity. And again, this is why we have different governments. Different governments are elected with the will of the people. They get to make those determinations while they're in office of like where the line is and what kind of opportunity that we're going to take. I would just say that for people who are skeptical, the opportunity that we have right now is truly once in a lifetime, given all of the geopolitical dynamics and what's going on in the world. And I would be so disappointed if we couldn't figure out a way as a country to make that work provincially, federally, industry, Indigenous, elected officials, everything, all of the people who are involved in these decisions. So I really am hopeful, and I hope that that we can all compromise in a way that is comfortable to each of us to make this happen.
Okay, let me build a framework here, and I think perhaps this might help for folks that are skeptical about this being a once in a lifetime opportunity. Right now, or for the past 15 years, U.S. shale has been the supplier of increased demand for oil. They have been they've been effectively producing that additional demand incrementally for the last 15 years. So they've been supplying that market. US shale has started to plateau back in October, November of last year. There isn't as much opportunity to continue to expand that market as people believe there to be. Very recently, the UAE fractured away from OPEC plus, or whatever, however you want to look at that grouping of producing countries. They are going to try and increase their supply to the market because of the current, depends who you ask, 3 to 15 million barrel per day supply suck that has occurred because of the Strait of Hormuz crisis. In addition to that, we're getting close to a 1.5 billion barrel deficit in the oil market right now. That means there is an enormous amount of opportunity to fill SPRs and different areas. So now that dramatically shifts the cost curve of the oil and gas industry. For the longest time, we've talked about $26 break-evens, $40 break-evens, $50 break-evens. If oil prices are going to be structurally higher for longer because of the new increase in demand, the United States for a decade, maybe even two, had a trough or a peak energy demand and didn't need incrementally more barrels of oil to satisfy their consumer. The current demand forecast for energy in the United States and more broadly globally has gone through the roof because of data centers.
Yeah.
If you just look at politically, you have the left and the right clamoring to their constituents about, and there's more and more people talking about, I don't want a data center in my area because energy prices are going up. And these companies have infinite money to buy energy that is not going to be in supply. We need to satisfy this. And as a result, that business case that Justin Trudeau said there wasn't one for has emerged and every single economist will tell you that it exists now. The idea that we were going to
it always existed. We could just pretend. We could just afford to pretend that it didn't before.
We lied to people before, but now it's impossible for them to even lie about it. You cannot cover this up. So now when you see energy prices spiking, people are going to see it. So as a result of this, you combine the increase in demand because of data centers. You combine that with a hostility between the United States and Canada from a political perspective, with the framework of elbows up and Donald Trump being the enemy, all those sorts of things. And we are in this pressure cooker economically, where the West has this opportunity to build infrastructure that the entire country agrees is necessary. But I haven't seen a framework from the federal government that pitches this idea. A year ago, we were talking about reducing trade barriers provincially. None of that's happening. You have this. We're coming to a point.
Some of it's happening. I will give Kearney a little bit of credit, but yes, there's only so much he can do from the federal level. A lot has to be provincial governments as well. So I'll give Kearney that. But yes, agree. It's not making.
So we have this new renewed opportunity where we can. All right, holy mackerel! We are no longer going to plateau at 140 million barrels per day of oil demand. It is going higher. How high is that? Maybe it's 150. Maybe it's 160. Maybe it's 200. We have a new technology that is increasing the amount of energy required. Whether that comes from the sun, from inside of the ground, or from wind, it's going to be a contribution of all. We need all hands on deck here. Nuclear, whatever. All of that has to happen. And you can see it in commodity prices. So what are we going to choose to do? Are we going to supply that? We have all of those things in spades. Are we going to supply that to the world? Or are we going to shoot ourselves in the foot? And this is something that is going to help pay for all of the social services that we want.
Yes.
Education, healthcare, roads, infrastructure that families need, dental care, child care. All of this is covered by the tax revenue generated by these industries. So if you think that these companies are going to just like pay out of their pocketbooks to do this without any sort of clarity on policy, you're out of your minds. We need to give it to them so that they can help us help the population base. If we want more healthcare, more nurses, more doctors, more teachers, more hockey rinks, more tennis courts, more built out roads. If we want all the things that we've grown to expect, we need to generate more tax revenue. And if we want to generate more tax revenue, we need to sell more of what we do best. So we need to build. End of story. So I hope that we can, as Albertans, get out of as Canadians get out of our own way, but as Albertans, get something in place so that we can deliver our commodities to market so that we can help take care of the rest of the country.
Mm-hmm. I agree.
I don't think we have a problem with that.
No. And I think that's the missing piece. And I think maybe, people who are very pro oil and gas or more on the conservative side of things forget to mention that we're not just talking about like higher stock prices and corporate profits. Like, don't forget that energy companies pay twice. They pay corporate taxes and they pay royalties that are significant. For example, I think I've talked about this before, but in 24, 25, when we had that sort of shorter term oil boom in Alberta, the bitumen oil royalties alone were about $17 billion on a, $60 to $70 billion budget. So 1/3. So imagine what
that's
that
more than
be.
RBC, CIBC, Scotiabank,
Correct.
Manulife pay in taxes, by the way, just for people to have an understanding. That doesn't even include the corporate taxes that they pay and all their employees and the amount of tax that they pay.
That royalty money is going straight into the provincial revenue line items, and it's paying for hospitals, social services, all of the things. So again, I know people have like to say about,
of that budget, of the provincial budget, how much of that goes to social services?
Well, healthcare is usually half, social services usually 10 billion, education primary is about 13 billion. I would be probably 75 to 80%, I would say. If you're
what
looking
are we
at
doing?
Education, health, social services, housing. Yeah, I would say that's just off the cuff. I'd have to confirm. It's different each year, but yeah, I would say about that.
What are we doing then? Do we want great things? Come on. So I think you and I are very much in agreement on this. I do really appreciate you giving like a rundown of the current situation, because it was a little bit murky for me. I think that Canada is in for what is going to be a really amazing decade. This is the decade that our generation has been waiting for. When we came out of school, we always heard about the economic boom of the earlier Gen X boomer generation, where you have families in Calgary and Edmonton, and to a lesser extent, other smaller towns around the province that had experienced that big oil boom and generation of wealth that was unrivaled across the country. And I believe that this is going to affect, because of the technology overlay that is occurring, I believe that this is going to deliver something similar if we're willing to build for it. And I did say that this is a technology that moves faster than ever. And this is the reason why the S&P 500 is trading at 23-ish times earnings, 24 times earnings, is because everyone sees that country moves faster than all others. And they're going to, and will continue to, take advantage of every technological revolution because they drive that. And that's the way that capital markets work there. We have been a country that benefits from being right on top of the world's economic engine. And if we are going to make an enemy of that engine, we are effectively shooting ourselves and tying it in the foot while simultaneously tying our hand behind their back. So we need to do multiple things here. We need to build, we need to put our elbows up, so to speak, and decide that we want to be an economic superpower and give the world what it wants, while also recognizing that we have, because of our location, positionally above the economic engine of the world, the ability to create something great. And I hope that we can come to an agreement with the United States from a trade point of view, and we need to repair our relationship there. And a lot of that resides in the hands of the United States, but also ourselves. And we need to recognize that it's in our best interest not to make an enemy of them, but rather to be their ally. And because we want to sell into that economy, we need it to help pay for our healthcare, for our teachers, for our economy. So Mel, thank you so much for kind of laying the groundwork there. I think it was really helpful. It was definitely for me. And I hope that over the coming months, I've long said that I'm giving the federal government until the end of the summer to have some sort of something in place. I think it can happen.
Yeah, it's both and. Let's be elbows up, but not towards each other as Canadians. And let's just not let perfection be the enemy of the good. Let's all be willing to make some compromises for the good of the country. And that's probably the most Canadian thing that we could do is value each of the perspectives and opinions that are circling this debate in a way where we can work together and make progress together.
Yeah, totally agree. Well, thank you so much for your time. It's always a pleasure.
Thanks, Joel. Take care. I'll see you next time.
Bye. That's all for today. Thanks for listening. If you found this valuable, please subscribe and share it with a friend. As always, the information on this podcast is for educational purposes only and should not be considered financial and/or tax advice. Please consult a licensed professional for your own personal situation. Joel is a registered portfolio manager and investment advisor, and clients of his and his firm may own securities discussed on this podcast.